Hey, welcome, guys. It is Monday night, June 23rd, in preparation for Tuesday, June 24th. Wanted to get into the David Ryan stock investments as a treasure hunt, market wizards interview with top traders. Again, keep in mind this is the stock section, but there's still things that I feel are applicable to all traders, not just stock traders or not just futures traders. Um, let's see. All right, so we'll start here. Um, Jack Swagger asks David Ryan, says, what kind of things were you studying? He said, I would go over charts. I studied companies, past recommendations. I studied historical models of great winning stocks to ingrain in my mind what a stock looked like before it made a major move. I tried to get to the point where I looked at the exact same things that O'Neill did. He was my role model. Um, and let's see. Next thing down here. Did you know what you did wrong? He said, yes, I sat down and studied every mistake that I had made from June of 83 through the middle of 1984. Probably my biggest mistake was that even though we were in a moderate bear market, the Dow came down from 1296 to 1078. But I continued to play as aggressively as I had during the bull market from August of 82 to June of 83. I made the mistake of buying stocks that were overextended. By that, I mean I was buying stocks that had already moved 15 to 20% above their price basis. You should only buy stocks that are within a few percent of their basis. Otherwise, the risk is too great. I put a side note. If it moves too far, you're better to wait for a reversal. That was also mentioned in Tape Reading Book, which that's a good book too. Maybe we ought to read that sometime. Swagger says, you were confident despite your poor performance during the mid 83 to 84 because you felt that you had figured out what you were doing wrong. David Ryan said, yes, because I studied very hard and I was determined to be disciplined. He said other stuff there, but I thought that was a good quote there. Um, how are you doing during this year? This interview happened in May of 1988. He said, so far this year, I am down. We are in a different type of market. Stocks are not moving as quickly as they had in the last 3 years. I am playing with a much smaller amount this year because I think the potential for making a lot of money is much more limited. We got to keep that in mind as we continue on our journey. Not only days, but there's going to be weeks, months, years, seasons when it's just a scale back. It's not keep doing the playing the same way we always have. So that's something to keep in mind for future stuff. Um, Swagger says, you mentioned earlier that for a while you read virtually every book on the market that you could find. What reading list would you give to someone starting out who is serious about becoming a successful stock trader? He names a number of books here. I mean, I could go through them, but I'll hold that for another time just to keep this short tonight. If you want book recommendations, I'll be happy to pass some of those along to you. Um, all right. He said, all those books are good, but you learn the most from the market itself. I thought that was a good summation of after he lists a bunch of the books that he highly recommends. He said, but you learn the most from the markets itself. Swagger says, what kind of things did you learn by keeping your trader's diary? He said, not buying overextended stock, using O'Neill's criteria for stock selection, and being as disciplined as possible. The more disciplined you can get, the better you are going to do in the markets. The more you listen to tips and rumors, the more money you are likely to lose. Um, has keeping a diary been an important part of your success? David Ryan says, absolutely. Um, okay. Skipped a couple pages here. Uh, Schweiger says, you actually prefer to buy a stock that has already doubled as opposed to a stock that is in a long base. David Ryan says, to sum it up, I am looking for the strongest stock in the market in terms of both earnings and technical picture. Um, how long do you typically hold a stock? He said, I hold on to my big winners for about 6 to 12 months, stocks that are not that strong about 3 months, and my losers less than 2 weeks. Again, we can translate that into our scalping time frame or our intraday time frame. Hold on to your winners a little bit longer. Hold on to your losers a lot less. Do you pick an objective on the stock that you were buying, basically a price objective? He said, no, I usually wait until the stock runs up, builds another base, and then breaks down. That's when I liquidate. Um, Schweiger says, do you think people should only use market orders? And David Ryan says, in a dull market, that is trading back and forth. You could put in a limit order, but if you really think the stock is going to make a big move, and that should be the only reason that you're buying the stock to begin with, then there's no reason to haggle over an eighth of a point. Just buy the damn stock. That's my emphasis there. And again, that goes back to you, Dustin. If you feel like it's going to make that move, don't haggle over that eighth of a point. However, if your setup is a break above a prior level because you're playing the divergences, then that's a different story. I won't harass you over that. The same thing applies to the downside. If you think the stock is going to drop, just sell it. But that was good. I have some more here on the next page. He talks about volume. Schweiger says, so volume becomes very important as a filtering process to avoid getting whipsawed. David Ryan says, yes, if the stock moves to a new high ground, but the volume is only up 10%, then I would be wary. Schweiger says, do you buy it the first day the stock breaks out to new highs, or do you wait for it to consolidate for a few days? David said, I want to buy it as soon as it goes to new highs. Schweiger says, if you buy a stock at new highs and it pulls back into the range, at what point do you decide it was a false breakout? And David Ryan says, if it re-enters its base, I have a rule to cut at least 50% of the position. Okay, I think that's where I stopped in this chapter. Yes, I don't have anything else that I marked for these notes. All right, we'll continue on that tomorrow. Let's jump into the analysis here. So I have the SPY chart pulled up here on the 1440 minute SPY chart. We noted that we had bounced off of the 20 period moving average the other day on Friday. Friday we bounced off that 20 period moving average, leading us to what I thought could be that move back up. Did a little bit of poke down below, but basically we did an outside up close day on the SPY. So that's something to be aware of. Also, we cannot ignore what the market is telling us right now. We still have this LBR 310 pattern that we want to be aware of. This has not broke down significantly yet. We just can't ignore what's going on here in the overall market. Now, this is not all-time highs. We did here, poked up here, made one new high, a second new high, but then we failed, pretty tremendously. And since then, we had kind of a capitulation type volume. I have one of the charts that show that capitulation volume. I'll see if I can pull that up here. But a capitulation like volume there. And then we've just moved this straight up, a little bit of failure, and so we're trying to move back up here. So it could be showing a little bit of weakness here. And I'll show you some other things as we go along here. All right, so then the other thing I wanted to show you is the ESU 25. Again, this is I believe it's the 30 period moving average is my pink one. Inputs 30. Yeah, that's my 30 period moving average. We come down here, bounced off that. This was Juneteenth where we broke below, but here's what I wanted to show you. So let me here, guys. Okay. So this was the 3-bar. 3-bar, we were looking for a 3-bar breakout. Well, we broke down on Juneteenth. Friday closed up. Today, we broke below it again, only to close back up. And then so far in the Globex session here, the Asian session, we have now taken out these highs. So these prior highs was 61.09. I think we hit 11 something. Oh, nope, 1650 now. So now we've hit a high of 1650. So we kind of had a false breakdown out of that 3-bar, only to come back up and now take out those highs. So again, we cannot ignore what the market is doing live time. So we just need to continue to pay attention to that. Okay. All right. I wanted to show this here. Oh, so this shows this is the one the volume. So what I did is I put a 1440-minute chart on a stack divergence thing that we use. And this is you can see the volume, the volume here back as we were coming to this capitulation type area. See how the volume is, significantly higher. Well, on the initial breakdown, we started that initial breakdown, volume peaked out, then volume even exceeded that once we got down here. You can see most of the other volume was not quite that high. Kind of a capitulatory. You got the VIX making new highs. You had ticks shooting down here. We were hitting the negative 15, 1600, 14, 1500 ticks, coming into that. And we've got a nice, beautiful bounce up since then. Kind of riding off that 20 period moving average, as I've pointed out a couple times. But pay attention to this. Look at this. We had that capitulation down here. But now, as we're continuing this move up, we're continuing to make these higher prices, yet we're doing it on a fast line divergence, a slow line divergence, a little bit of tick divergences, the VIX down here starting to come up. The breadth is starting to trail off. So, this we're going to be wary and see if we take out these highs here. Is this going to have continued strength? Are we going to start breaking out? Making new highs here on the LBR, making new highs on the ticks, making new lows on the VIX, making new highs on the breadth. Is this going to be substantiated? So that's something I'm looking at on the daily version. So let's keep an eye on that, just in the back of our minds. And let's see. And then I wanted to show the 240-minute chart, just to see where we are on this. You recall me, pointing this out. Let's move up, but let me drag this down here, guys. Okay, yep. So right now, we haven't really taken out those other highs. We do still have some upside potential. I just marked this 6109 as kind of an area where we touched, come up and touch close to that a couple times. Let's see. I don't think there was any other. Yeah, there was. So back here where we hit that 6109, and then, so I just kind of arbitrarily chose that line based on a couple different not arbitrarily, based on a couple times that we had hit that. And so we are above that, but we still could be reaching overhead resistance here. Sorry, I should have found a different route, but anyway, we do still have some potential overhead resistance that could come into play. But again, as of right now, the market is showing us that it's breaking out to the upside. I did want to show this. I had mentioned this in the chat room to Jacob. On a 2-minute chart, we volume at. So you see, we had this sideways consolidation, quite a bit of sideways consolidation. Then we started breaking out here close to the end of the day. You started seeing this volume come in here. So if you let's zoom in on my volume down here a little bit. Oh, cancel. Sorry. Yeah, we started to see that volume coming in here. And that kind of supported. We had this long sideways consolidation that kind of supported this move out of this into the close of the day. Now, obviously, you always have a little higher volume to close the day out, at the 1600 candle, but that volume started coming in before that. As you can see overnight, that has kind of sustained the upward move so far, where we're sustaining that move. So again, we cannot deny those things that are right in our face. Okay. And then the last thing I wanted to look at is my internals here. This is on the VIX. So on the VIX here, this low from back on the 20th, this low up 3 points up from 1911 is 2211. And then this high today was 2251. Well, 1951 is 3 points down from that. So we want to kind of just keep an eye on these. Are we going to move down below 1951, push down in that VIX? Well, down in the VIX would be confirming the upward move. So we want to see, are we pushing down below that 1951? pretty significantly tomorrow? Or are we going to move back up? The way this is kind of playing out here on the LBR 310, kind of get that little bit of a reversal. Well, that further downside, you could get that further downside here in the VIX, which again would support the up move in the indices. So things we're just going to keep an eye on. You got Powell tomorrow, 10 a.m. So this could be an exciting day. Let's keep an eye on it. I think that's it for now, guys. Thanks. We will talk again tomorrow.